that I know you're focused on. One is CPI, and that is, we're going to talk more about inflation later this hour. Give us your thoughts on it and whether you think it's transitory or more lasting, because, boy, home heating prices are going to go up later this year.
And it's good to see you, Tyler. Yeah, CPI and PPI are very big data points this week. I think some of it is transitory, but some of it's not transitory. What we're watching wages, we're watching rental costs, right? Rental costs follow home prices. We know home prices are up on average about 16 to 18% year over year. So those parts are not transitory in my view. So let's see how the NFIB, how this translates into the NFIB sentiment survey that comes out. And of course, we also have jolts in retail sales. I think retail sales are going to be very good. They were good last month, and I think people downplayed it. But I do think the consumer is in pretty good shape.
You've got a lot of demand. You've got a lot of consumer demand. But the problem seems to be on the supply side. It seems like there are shortages endemic across the economy, whether it's automobiles or clothing or Christmas presents or things like that. How troubling is that? And how sort of slowing could that be in the overall economic picture, before we get to some stocks here?
Oh, it's definitely slow. It's definitely troublesome. And I think it lasts for much longer than what the Fed is expecting. So there are two reports this week that are coming out, and it's going to be very interesting to hear what they have to say. So J.B. Hunt, right? So let's see what about labor cost inflation and driver shortages. And we know what happened to FedEx. So is it the same problem or not? But demand, Tyler, they're driving things all over the place, right? It's food and beverage, it's paper and packaging, it's auto parts. I mean, it's so broad based. So I want to hear about demand. Can they handle it? And do they have pricing power? I think J.B. Hunt has better pricing power because they're truckload and intermodal. The other one to keep a very close eye on, Fastenal. It's a proxy for industrial and construction demand. And how are they dealing with it in the face of higher PMIs and, again, the supply chain? So we're going to get a lot of data points. I don't think it's going to be great. I don't think it gets resolved anytime soon, but it'll eventually get resolved.
All right, let's move on to the financials, which obviously will be a point of emphasis later in the week. Walk us through what you expect there with the big banks.
Yeah, so 47% of the financial services companies report this week. As Bob mentioned, the big six are the most watched, right? Probably the most owned at this point, too. And they're going to set the tone. All of them are going to talk about macro, which is I can't wait to hear, right? The economy, what we were just talking about, inflation and interest rates and the Fed. The other question is loan growth. Has loan growth inflected yet? And I think this quarter it's going to be good. I think next quarter guidance is going to be better. And it's the 3 C's I'm listening for. How is the consumer doing? What's happening with credit? I think it's pretty benign. Capital markets. And then, of course, what is the net interest income guidance going to be, given that we've seen higher interest rates and a steeper curve throughout this past quarter?
Do you have a favorite bank for long-term investors?
I have 3.
All right, let's hear them.
I have, and look, JP Morgan's great, but it's expensive. That's the only reason I don't own it, but flawless execution. But I like Morgan Stanley, I like Bank of America, and I like Wells Fargo, all for different reasons. Morgan Stanley is diversifying their mix. They did a lot of M&A last year in Eaton Vance and E-Trade. So they're less dependent on the curve, but also they're going to do very good in terms of M&A, given their pipeline. You get a 2.8% yield, and they're buying back $12 billion of stock. Bank of America is your spread play. They're the most exposed of all 6 of these companies. So if you think rates are going higher, you want to own this company. They're buying back $25 billion of stock, and it trades at 1.7 times book, very attractive. And then lastly, Wells Fargo is the cheapest of the ones that I own. Citigroup is actually the cheapest of the big 6, but Wells Fargo is 1.2 times book. They're buying $18 billion of stock back. It's a restructuring story. It's a cost savings program story of $8 billion, and it's an asset sales story. So we're not going to learn about the asset cap, so take that right off the list, but eventually we will, and that's going to be a really big catalyst down the road.